Support and resistance flip, or otherwise known as an SR flip, is when support becomes resistance or resistance becomes support. We're going to use candlesticks, market structure, horizontals, trend lines, and channels from previous tutorials to better explain this concept. There are 4 steps to an SR flip. 1, you want to see the breakout on high volume. 2, you want a significant candle closure above or below the level, signifying that it was held. 3, you want to retest the level on low volume. 4, you then want bullish or bearish market structure continuation, which then confirms the SR flip. Take a look at some examples here. First, at this daily horizontal on a weekly time frame, just because the chart's a lot cleaner. What's important to understand is that both the bears and the bulls want to defend this level for their own interests. Okay? We can see here that the bears defended it as resistance until the bulls had a breakout on high volume with a significant closure above, signifying a breakthrough resistance. However, when it came time for the retest, the bulls failed to defend it as support. So we're just back at resistance again. So this is a failed SR flip. Now here, the bulls take another run at it again. We have a significant candle closure above on high volume. When it came time to the retest, we only wicked below the level. We didn't close below it, and we did so on lower volume than the breakout, and then had bullish market structure continuation, giving us a confirmed SR flip. Okay, we'll take a look at some more examples here. Let's look at this trend line. We'll do so on a daily time frame. We can see here that the trend line held as support here, here, and here before then being lost for a short time here, which we'll take a look at. So we can see that the bears had a breakout candle on high volume with a significant closure below. And when it came time to backtest, they defended the level as resistance on lower volume and then had bearish market continuation. We can see here that it was tested as resistance again. The bulls had a failed SR flip here before then having a successful one here and having some degree of bullish market structure continuation. All right, we'll take a look at our last example being a channel. So when it comes to channels, we can expect price to simply go from the bottom to the top, back to the bottom, to the top, and back to the bottom over and over again until there's a breakout. In this case, a breakout to the downside. We can see here that the bears successfully broke out on high volume with a significant candle closure below, back tested the level to confirm it as resistance on significantly lower volume for then bearish market structure continuation, thus confirming an SR flip.